night in America. I guarantee you're going to walk away with scratching your head going, aha, or some potential new targets, new cities to be investing or putting on your buy box to start exploring. Because tonight's episode, not only are we going to talk about the fastest growing markets, the fastest where they doubled the most, but also the cities where they've grown the slowest. And just to give you a bit of an idea, we've all heard people talk about how expensive real estate is getting, how things will double. And basically, if you buy a home, it's going to double in 10 years. That's the case for a lot, but also there's a chunk of places in the United States that's not the case at all. So we're glad to have you here. Make sure if you're listening to this, I'm going to try to go. You may not need to watch the video, but if you are watching the video, I'd love your comments, any concerns when we talk about some of the cities out there. I really enjoyed putting this together for you guys out there because I'm always looking for the hot markets to look at, cities that are growing. When I get a list in of notes, what cities are good to look at, what cities are bad to look at. Now, you've always heard me talk about you can't bank on appreciation. You can bank on cash flow, but don't bank on appreciation because we know appreciation varies across the board. Well, tonight's episode is talking about an article that came out just recently, and we'll get to that in a second that talked about that. But anyway, guys, welcome to Note Night America. We're honored to have you here, doing this for 13 years. Thank you again for helping us make us the #1 YouTube channel at WeCloseNotes.tv and helping us have the #1 podcast, not only with Note Night in America, but also the Note Closer Show podcast. Thank you so much for subscribing to both of those. Love to hear from you. Leave comments, ask questions. I'm always here to help you take your business to the next level. As always, you can book a call with me at talkwithscottcarson.com, talkwithscottcarson.com to answer any of your questions. But want to let you know, we do have our next 3-day note buying workshop upcoming in June 22nd to 24th. That's a Friday, Saturday, Sunday. I might have the dates off, but it's always the third weekend, the third Friday, Saturday, and Sunday of the month there in June. You can sign up for our next workshop at notebuyingfordummies.com. And if you like Note Night in America, go ahead and sign up for the Zoom. When we do them live, or sometimes we pre-record, you'll let us know, but you'll be the first to get copies of the replays of these videos, and you do that at notenightinamerica.com, especially if you don't want to subscribe to the YouTube channel and you're in the dark 21st century or 20th century. You know. But anyway, let's get into tonight's bread and meat and potatoes out here. So what kind of led this to this episode was I was scrolling through my news feed for KXAN, which is a local NBC affiliate we take a look at. And this article popped up, sticker shock. Home prices doubled in under 7 years in these major U.S. cities. I'm like, well, that's a pretty good SEO optimized title. So as I dove into it, I was like, oh, I've got a lot of my colleagues, my friends, note investors, countrymen, obviously, that would probably find this interesting to see how fast real estate is doubling or how slow it is in a particular city. So the article by Point Two Homes, was study basically said that they looked at the top 100 cities. They actually divided New York into the 5 boroughs. So it was 104 markets that they looked at. And in 68 of them, the largest ones, basically real estate doubled in 10 years or less. So 68% of the time, if you buy something and hold on to it for at least 10 years, it's going to double. Well, I wanted to target the ones that double the fastest because there are some of those that are actually moving at a much faster pace out there. And so it gives you a bit of an idea. You can see here that this was Point Two Homes did this article that pulled it up, and I'll share the link for you in the description there if you want to go back and read the whole article. I think it's very valuable. But to give you a bit of an idea where we stand across the country, as of February 2024, home prices increased 6.4% year over year compared to February 2023. So we saw a 6% appreciation growth in the last 12 months. Okay. So it's growing by 5 to 6%, 7%, pretty steady appreciation as far as home prices. Okay. The national average of homes right now is at just under 412,000. That's by Redfin sharing that information, $411,887. So if you're looking at buying a home, that's kind of what you got to expect for the basic starter home. Not your dream home, all right, but maybe your first-time home. That's where you're looking at on average across the country. Obviously, that's going to vary. Some places it's more expensive than it is in others, so keep that in mind. If you can afford to buy a house right now, buy it. You can always refi in a couple years and rates go down. I think the average mortgage rate 30-year was at 7.4, 7.5%. I get it. It's not exciting, but if you wait around 4 or 5 years, it's going to be even worse. It's going to be more expensive. Yes, if you didn't buy 5, 10 years ago, it was much cheaper then. I get it, but you didn't make as much. So it's all relevant on where it is. If you can afford to buy, refi later on. I think back to when my mom and dad bought the first house second house we grew up in. Their interest rate was like at 12. I know it's kind of crazy, but they made it happen. They made it happen, then refinanced, and we pulled some equity out during the growth and did some great stuff there. So that's something to think about for it. But anyway, let's dive into the meats and potatoes while you're here. Let's talk about the top 20 markets where values doubled the fastest. Now, number 20 right off the bat was Tucson, Arizona. I believe that's where the University of Arizona is now in the Big 12 versus the Pac-12. It took just over 7 years, 7.1 years for property values to double in Tucson. All right. Number 19, Milwaukee, in a much colder area. Milwaukee, Wisconsin, also 7.1 years, came in at 19th, beat just a little bit, but on average 7.1 years for property values to double. I'm not a big fan of buying in Wisconsin just because the property taxes are so expensive. Yeah, they can be expensive here in Texas, but they're really, really expensive in Wisconsin. So it kind of shoots a lot of those short-term rentals, notes that you end up planning to take back. It's not a desirable spot for the most part. Number 18 was Boise. Not really surprised there as much growth as Boise's seen, but 7.1 years as well for real estate to double. So if what you're looking at now, if you bought 7.1 years ago, you've been paying half price of where it is. Number 17, Cincinnati. Cincinnati actually has gone through a lot of growth. Not a big surprise. I've been kind of bullish on Cincinnati for a while. Came in at right at an even 7 years for it to double in property value. Number 16 was Chandler, Arizona, also at 7 years. Number 16 on the list. Chandler is just outside of the Phoenix area. And Arizona and Florida's cities really dominated this. I was really surprised Austin, Texas wasn't in the top 20, even not even the top 25, ladies and gentlemen. And we've seen a lot of growth here. So kind of interesting to see that. So number 15 is Las Vegas's northern neighbor, North Las Vegas. Not Las Vegas, but North Las Vegas. Came at number 15 in even 7 years. And there's been a lot of growth up there. A lot of people moving out of Sin City, north there a little bit. Also people from California moving from there into more affordable parts of Nevada. And it's seen a lot of growth in the last 7 years. Those values have doubled basically. Number 14 is Charlotte, the Queen City. 7 years even. I've been big on Charlotte. Charlotte's gone through quite a bit of growth since back in 2010. So in the last 14 years, it's doubled probably twice. Number 13, Cleveland, Cincinnati's northern neighbor. Cleveland rocks. Well, yes, the real estate there is getting more expensive than what it was. 6.9 years for real estate to double in price. We look at number 12 is Mesa, Arizona, also at 6.9 years for real estate to double there. Number 11 was its neighbor, Gilbert, Arizona, was also at 6.8 years for real estate to double. That's the 11 through 20. Now, as we roll into the top 10, you'll probably see some surprises on here. Okay, number 10 was Phoenix, Valley of the Sun. Not really a surprise there, but it was not the highest ranked Arizona city. Okay, at number 10 at 6.8 years for real estate to double. Number 9 was Jersey City. This really kind of blew my mind. Jersey City, New Jersey was the only city really up in that neck of the woods to make the top 20. Came at number 9 at 6.8 years of growth. 6.8 years for the real estate to double. Number 8 was St. Pete, Florida, in God's waiting room. St. Petersburg came at number 8 at 6.6 years for real estate to double. There's been quite a bit of growth and rebound back there. Number 7, this surprised me, Buffalo, New York. Real estate's doubled in the last 6.4 years. That doesn't mean necessarily a lot of good stuff, because I know there's been folks out there that have bought $20,000, $30,000, $40,000 houses, but it's good to see that the market is starting to turn. It's starting to, if you bought there, it's rebounding. There has been a lot of, obviously, marketing and growth trying to get industry to come into Buffalo, especially the Niagara Falls area, that neck of the woods. So yeah, Buffalo, you're the Bills Mafia doing well to make real estate go up there in Upper New York. Number 6 was Scottsdale, Arizona. The Richie friend north of Phoenix. 6.2 years for real estate to double in Scottsdale. That's not a surprise at all. I kind of call Scottsdale Austin's sister city there in the Arizona area. Number 6. Number 5. Number 5 was Baltimore, Maryland. This kind of really shocked me. 6.1 years for real estate to double there. I mean, there's been a lot of growth. You know, Baltimore's been a rougher city in the past, but it's actually a lot of gentrification going on, especially down the Inner Harbor area, that neck of the woods. So yeah, Baltimore's getting more expensive every day. Number 4 was Miami. Viva la Miami. Came in at even 6 years, not Miami Beach, but Miami itself, 6 years for real estate to double. So if what you're buying something now, it would have been half that in 2018. That doesn't surprise me. Now, Miami's also been difficult the last few years because of insurance costs going through the roof. Something to keep in mind if you're looking to buy there in God's waiting room capital, basically, I like to say. All right, number 3 will kind of surprise you probably, Tampa. I thought Tampa would have been lower than Miami, but it was actually higher than Miami. So Tampa came in at even 6 years, just a little bit higher than Miami for real estate degree. Yes, real estate may be more expensive in Miami, but the doubling rate was higher in Tampa. All right, number 2. All right, number 2, Spokane, Washington. That kind of surprised me, but with people leaving the communist country of California, it doesn't surprise me. Spokane's a beautiful city where the University of Washington is, who just lost the national championship, and where also Gonzaga is located, big basketball school there. So 5.9 years for real estate to double in Spokane. Now, number 1 is going to rock your world. It totally caught me off guard. I was surprised, but very excited to see that. And that is number 1, little drum roll, please. Detroit Rock City, Michigan came in at number 1. Get this. And real estate has doubled in 4.9 years there in Michigan. It's good to see that. I mean, Michigan obviously has been difficult. A lot of blight on the city, struggling for property tax to get paid. But it's good to see that property values are starting to go back up and rebound there in Michigan. So 4.9 years for real estate to double in Detroit. Yes, I think it's a bargain buy. I can remember buying back properties for $1,000 back in 2008. I wish I had bought 1,000 plus more of them. But it's still good to see that. Now, those are the top 20 that had the fastest doubling, where the values doubled the most. There were 10 cities that had high growth rates, and I want to go through that with you guys here. Number 10, these are the fastest growth as far as growth in price appreciation, not doubling like I just showed you. But number 10 was Lexington, Kentucky, at prices on houses go up by 15.5%. Number 9 was Meridian, Idaho at 15.6. Cincinnati, Ohio, which was on the list there for doubling, came at number 8 at 15.9 in growth on house prices. Miami Beach came at number 7 at 16.7. Dallas, Texas, 16.9% increase in pricing, housing prices. Now, if you're going through the big D and don't mean Dallas, it definitely means the big D for debt. Okay. Buying there in Dallas. All right. That's just at Dallas, Texas. So that's not Dallas, Fort Worth. We don't want anybody in Fort Worth getting pissed off, but it's more rapid growth in Dallas going on. All right. Let's move on to the number 5. This really surprised me. Fort Wayne, Indiana at 18.6%. Number 4, Richmond, Virginia at an even 19%. Number 3, kind of surprised me on this one. Boca Raton, Florida had an increase at 22.5%. This is just in 2024. Okay. I don't know if that's got to be the president, everybody moving down there to be with the president, or ex-president, I'm sorry, maybe the new president, who knows. But Boca Raton came at number 3. Number 2, Birmingham, Alabama, one of the better buys, I would say, out of here. 24.4% growth, a lot of growth going on there in Birmingham. I like Alabama for the most part. I do not like the 1-year redemption period if you have to foreclose on notes there, but it's still got a lot of growth. And then number one, Cleveland, Ohio. This surprised me. The most amount of increase in property values or prices for homes increased by 25.5%. So if you've got to move to Cleveland, be prepared to pay a little bit more than what you would have done a year ago. Okay. This is kind of one of the charts that Point to Home talked about. You can see Detroit took 4.9 years for it to double here. One of the charts that it talked a little bit differently on here. Most expensive housing market, Irvine, California. Prices increased, get this, from 750,000 to 1.5 million. That was the biggest increase. Okay. Median home prices doubled the fastest. I mean, and the most. That was the biggest increase. It literally doubled in 7 years, but it was the biggest number, going from 750 to 1.5 million on average. Kudos to our friends that live out there in Irvine. Here's the thing: if you're investing in these markets, careful. It's going to slow. It's slow, slow, slow. All right. So here's the thing. Anchorage, Alaska is the slowest, over 19 years. All right. For prices to double. Okay. Arlington, Virginia, slow. Chesapeake, VA, slow. These were all 18, 19, actually, Anchorage is 21 years. Okay. Urban Honolulu, slow. Virginia Beach, Virginia, slow. DC, slow. Corpus Christi, Texas. This is what really surprised me. Corpus Christi is 19.1 years. All right. And that followed up by Brooklyn, New York. El Paso, Texas has been slower to grow. That doesn't surprise me so much there. Philadelphia, PA, where median home prices doubled the slowest. That's the thing to keep in mind. Manhattan, New York, and Lubbock, Texas round out your top 10 slowest markets. Lubbock kind of surprised me, especially as much growth as Texas Tech has seen up at Lakewood. But Corpus Christi, where I grew up, really surprised. I know it's been more of a value buy for the years, but it really is slow. Wait, now they have a note here for Corpus Christi, Texas, and Manhattan, New York, where home prices did not double between January 2000 and February 2024. We selected the lowest price point within this period. Okay, so that's tell you something. It didn't really, in 20 years, 24 years, prices really did not double there when you look at the 10-year national average across the board. Slower than that. So something to keep in mind. If you're buying those things, I'm not saying you can't make money. Make sure the cash flow is good and good, but your appreciation is going to be a slow boat. Okay. Something to definitely keep in mind. Here's another chart that I thought you guys might find valuable, especially Philadelphia. This is cities where single family home prices doubled faster than the median home price. Okay, I had to look at that a couple times. All right, but Philadelphia is at 7.8 years, where the single family doubled faster than the median home price. Brooklyn, 7.2. Houston, Texas, not a big surprise there. H-Town, 4.7 years. Pittsburgh, PA was kind of surprised at 3.3. San Antonio, our neighbor to the south, Viva La Cinco de Mayo, 2.1 years. Newark, New Jersey, 1.9. Boston, 1.3. Winston-Salem, 1.2. LA, 1.1. And this surprised me about New Orleans. New Orleans, Louisiana, 1.1 years, where single-family home prices doubled faster than the median home price. Now, in some cases, like New Orleans and Houston, I would throw that in there, have had the issues with the flooding and the hurricane. So big demand, low inventory in a lot of cases. And the same thing, like up in Philadelphia, been a lot of growth up there over the last few years with growth, but high demand, low inventory, especially New York and New Jersey, some of those places out there. So thought you guys might enjoy that. If you'd like to take a look at the full article for yourself, you can go to snip.ly, that's snip.ly/hot housing, where the H's in hot and housing are capitalized. That'll take you directly to the full report. You can read everything about it. But I thought you would find that interesting. Something to keep in mind when you're buying real estate, it's not all location, location, location. Sometimes it's about the deal flow, what's going on, making sure that you're not relying just on appreciation. I'm going to have negative cash flow for a couple of years because appreciation will happen. That's not always the case. So keep that in mind, especially if you're looking at putting less down and you're looking to get rid of private mortgage insurance. where you got to fall below 80% LTV on the first lien there so that you can get that PMI taken off. Appreciation is important, but it's slower in some places and faster in others. Hope you enjoyed this episode. Go out, take some action, buddy, and we'll see you at the top.